Hey, good morning, everyone. Let's see. Hope you're all doing well. It's maybe I pull this up. I don't know. And get the best angle. Um, it's June. I was gonna say July. It's June 13th. It's Thursday. We're almost at the end of the week here. We've got one more day, and tomorrow we're going to be streaming live here on YouTube the morning session. So let's dive right into it. We had more news this morning out of inflation, right? Or out of inflation, out of the U.S. for inflation figures. We got the PPI report after yesterday's CPI. Yesterday we had the CPI and the FOMC. The FOMC was like super sloppy, honestly. It was fairly sloppy. Overall, there were some moves, but a little sloppiness. And this weekend, we'll be posting our FOMC trading strategy that you guys can go and check out on YouTube. So, yesterday was pretty jam packed with news and expectations, which when you have two events like that, CPI and the FOMC, it is a difficult market to trade generally. I think it was a tougher market yesterday. You guys had to fight, barely scratched out of there alive, but there was some decent opportunities. Now, this morning we also had another inflation figure, the PPI numbers. So the producer price index, let's see here. So yesterday, the CPI that came out unexpectedly flat in May and actually slightly down, right, compared to the 1/10 rise expected from the stalling 0.3% increase in April. And the core CPI, right, which takes out food and energy prices, also eased somewhat last month, rising 0.2% compared to 0.3 expected and 0.3 in April. This is what we were talking about yesterday. And these inflation measures allowed prices to just rip into new highs. Now, today, we also had the PPI, the producer price index, which after the CPI, it's a little less anticipated. It's a little less volatile, realistically. So the year-over-year figure was expected at 2.5%. The prior was 2.2%, and it came out at 2.2. So it beat the expectations in line with prior. The U.S. PPI month-over-month, actually, it was 0.5% last time around, expected 1/10. It was negative 0.2%. So we also had the U.S. core year-over-year. 2.5 expected, 2.4 last time, and 2.3 came out. And all these figures, right, they were below expectations, would put downside pressure, or upside pressure on the market, downside pressure on the equities. And after CPI, right, we were expecting something of the sort. We got a little pop, and my thought process that I was posting in our room this morning was that we're probably going to get a pop and it fades off that PPI report, which I think we're going to see a little more downside. I'm going to talk about what had happened yesterday, especially with these equities and creating a trade plan for the S&P. But the 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 inflation figures have been continuing to drop to the downside, and yesterday, right, everyone was expecting the Federal Reserve and Jerome Powell himself. So gains were fairly limited on the Federal Reserve's scaled back its expectations for interest rate cuts this year after maintaining the key rate for the seventh time in a row. Now the Fed expects just one 25 basis point cut this year, down from from the three reductions that were penciled in back in March, which wasn't too long ago, realistically. Policymakers also emphasize that they require several consecutive months of waning price pressures before contemplating rate cuts, particularly in light of latest job reports. Now, so far this year, the Fed has not received the greater confidence it needs that inflation is sustainably heading towards that 2% goal, which is what Jerome Powell noted in his press conference. So, market's initial reaction was to the downside sweep, and typically, as you'll see this weekend, FOMC initial reactions do continue the momentum for a large portion of the afternoon. They tried, but there was a lot of bullish pressure that continued to kind of just like jump in realistically. So, in terms of other news, Broadcom, right, AVGO, reported earnings yesterday, if I'm not mistaken, and they gapped up aggressively, right? Super, super heavily. This thing has just been on a freaking tear. So much for a dividend name. This thing's up 13% here pre-market. It's been rallying super aggressively. I'm surprised they didn't announce a stock split during their a stock split during their earnings call, right? The thing is up from these lows in 2022, 311%. So this is what was carrying a lot of the weight to the upside on the Nasdaq yesterday into the close. And Apple as of recent has been two back-to-back days of like 7% gains that have been just rocking this thing to the upside swing. Apple has made new highs consecutively 2 days in a row, and is reportedly not paying OpenAI for integrating its chatbot GPT into its devices, and the partnership isn't expected to generate meaningful return for either company initially. So Apple instead believes that the offering OpenAI's technology to hundreds of millions of iPhone users is of equal or greater value than monetary payments, according to sources. So the tech giant announces at the OpenAI deal at its annual developers conference on Monday, along with its own AI system, Apple Intelligence. While Apple did not close the financial details of the partnership, the current structure of no monetary payments could become costly for OpenAI. And on the back of some of that news, after that event on Monday, we've seen massive upside in Apple, which has been sustaining not only the S&P but the Nasdaq very, very strong. Nasdaq has continuously made new all-time highs over the past 2-3 sessions here, and it's very, very difficult to stop this thing. It's on a raging bull. It's moving up super aggressively and trying to fade this big tech name on the back of all of this big tech just piling in, right? AVGO, which is Broadcom, Apple as well. Lower inflation figures, right? Everything is just running to the upside, screaming to the upside swing. Some of the last piece of news here, which is a little interesting because Tesla is looking pretty decent for that expansion higher. You can see they're gapping up pretty aggressively from yesterday. They're up at 189. It's a decent gap to the upside swing here. After yesterday's close, we're up almost 7% pre-market. Huge win for Musk and Tesla, right? Tesla shareholders. They look to set to approve his disputed $56 billion CEO pay package, as well as the electric car makers' reincorporation to Texas from Delaware. The massive 2008 compensation plan has been an overhanging on Tesla's shares for months after it was voided by the Delaware judge in January, who called it an unfathomable sum. So well, the official results of the vote will be announced at Tesla's annual shareholder meeting later today. Musk jumped the gun and revealed that shareholders are overwhelmingly backing him. So both Tesla shareholder resolutions and currently passing by wide margins. The billionaire wrote on social media platform X, sending Tesla's shares up about 6.5% right now before the bell. So even with shareholders backing, Musk still faces the risk of fresh lawsuits, as well as the challenge of appealing Delaware Judge Kathleen McCormick's ruling. And Piper Sandler thinks it's clear that Tesla's stock would fall if the compensation award was rejected. The other key issue is whether Musk walks away from the shareholder meeting with his goal of landing 25% of the voting control over time. So Morgan Stanley said that shareholders should be prepared for a significant slowdown in Tesla's AI efforts if he does not get his way. There has been a lot of volatility with Tesla, as you can see. It's been just sideways chop for months now, it would seem, but right now with this expansion outside of this range, and depending on what happens with the event today, we could see a pretty robust upside momentum move here on Tesla. Now, let's dive back into these equity markets. We've yapped enough about random things, but these equity markets yesterday formulated a fairly interesting gap here on the S&P 500 with very, very imbalanced momentum. And a huge at-the-ask trader of about 1,300 that sat at 42.17 on the S&P 500 futures. So there is a big area over here of extremely low volume. So if we actually do start stumbling below that area, it's going to be a quick move all the way back down to these 53.90s before we can potentially see new buyers stepping in. So yes, there is top heaviness, but we have to keep in mind that there is a lot of upside momentum after these good inflation reports. We've seen NASDAQ continuously rally on the back of strong tech, big tech earnings that are just holding this thing higher. So it is going to be a difficult task realistically to bring this thing down, but if we clear that low, right, there is some downside momentum under these low 40s as well, where we're trading at right now. If sellers come through into this market, I'd be interested to see some of that sell side pressure. Once we clear this up, we clean this up, right, then it could be clean skies ahead yet again to get some more powerful buyers back in the mix of this. So with that being said, let's take a look at what we got today. We're going to be opening up our live trading room. We'll open it up to a stream for tomorrow as well, so I'll see you guys then. And check out TradeProAcademy.com. We'll be doing this update yet again tomorrow to wrap things up and close out the week, my full week. And then next week, there is, excuse me, there is market closure on June 19th. I haven't fully dived into what that looks like because it's in the middle of the week, but I'll update you guys tomorrow most likely. If anyone knows, drop a comment down below. How are they just gonna close the one day at like 1 p.m. or what's the move there? So let me know if you know. Otherwise, I'm gonna have to